Good morning, it's Monday the 4th of April and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. Well, we thought spring was in the air, but is it? Is this cold whiplash of winter a timely reminder that these swallows are not quite yet gracing the horizon, perhaps economically as much as literally? So, well, let's see. As always, I'll start you with a quick summary of the key macro data points coming out this week in the world's markets. We'll then take a look in more detail at some of the bigger stories straight afterwards. So, let's get on with it. Let's take a look then at the economic numbers being issued this week. And today we'll get the latest Australian retail sales and an update on US factory orders. On Tuesday, it's interest rate decision day in Australia, and we'll discuss this straight afterwards. We'll also hear an update on global services PMIs and the US ISM non-manufacturing. Wednesday brings us the release of the minutes from the Fed's last meeting, which could be an interesting insight into if and how much the Ukraine situation is filtering into US economic decision-making. And we'll discuss this in more detail shortly. Likewise, on Thursday, the European Central Bank released their latest minutes, and we'll discuss these as well. Also on Thursday, we'll hear the latest retail sales figures in the Eurozone and the US jobless claims. And on Friday, we'll hear the Canadian unemployment figures. And the companies that we'll hear updates from this week are as follows. On Monday, Provident Financial. On Tuesday, HomeServe and Moonpig Group. And on Wednesday, the e-commerce retailer The Hut Group released their full yearlies. And we'll discuss these in more detail afterwards. Also, we'll hear from Hilton Food Group, Imperial Brand and Levi Strauss over in the US. On Thursday, international sports betting and gambling company Entain released their Q1 results. We'll take a look at these in more detail shortly. And finally on Friday, online fashion retailer ASOS released half-yearlies. We'll also be discussing these towards the end of today's report in more detail. And to wrap up, Johnson Matthey. Well, this week is a relatively quiet week as far as economic data and corporate releases are concerned, which means that trading is most likely to be headline-based. Traders will be looking at the latest developments, of course, from the Eastern European conflict, particularly after Putin said that unfriendly nations will need to pay for gas in rubles as from Friday last week, and as Russian troops pull back from Kyiv or Kiev, depending on your particular persuasion. What will the fallout be from the conflict this week? No doubt, as always, time will tell. But whilst we wait, let's take a look at this week's stories in more detail. On Tuesday, the Reserve Bank of Australia announced their latest interest rate decision. Now, last month, the RBA left interest rates unchanged at 0.1%, while highlighting an increase in inflation due to rising energy prices and supply-side issues. The RBA also noted the increasingly uncertain outlook due to the Eastern European conflict and came across as more dovish despite rising inflation. RBA Governor Philip has played down expectations of an interest rate increase this year, although he hasn't ultimately ruled it out. The labour market has continued to improve, with unemployment falling and wages rising. Furthermore, as a commodity exporter, Australia is directly experiencing higher iron ore and metals prices. With inflation ramping up and after New Zealand hiked interest rates, the RBA could of course then move soon. Expectations are for a June rate rise, so do keep an eye on the Australian dollar. The e-commerce retailer The Hut Group is due to release full-year results on Wednesday as the share price has fallen around 80% over the past 6 months, and amidst the chatter of disagreements between leaders and investors. SoftBank invested $730 million last May and the share has since tanked 85%. This means that SoftBank is therefore unlikely to exercise an option to invest $1.6 billion in the THG Ingenuity subsidiary. Revenue has actually been improving and half-year revenue was up 44.7% to £958.8 million, and the beauty business was an outperformer, seeing growth of 59% year-on-year. whilst nutrition was the weakest link with growth of 30.2%. THG has said that it would spin off its beauty business, but there has been no progress or details on this yet. Half one losses also rose to £81.3 million. Wednesday also sees the release of the latest minutes from the Fed's meeting in March. Now, in this meeting, the Fed, as expected, raised interest rates by 0.25% for the first time since 2018, as it battles 40-year high inflation. Now, the Fed also indicated that it could raise rates at 6 remaining Fed meetings. The minutes could shed some light on the extent to which the Fed's plans could be influenced by that ongoing conflict in Eastern Europe. Fed speakers have been vocal about the pace at which they consider the Fed should be tightening, with some supporting a steeper pace of tightening. According to the Fed funds, the market expects interest rates to be around 1.75% to 2% by the end of the year. Increasingly, policymakers have said they need to hike rates by 50 basis points in the May meeting. Should the minutes indicate that the Fed is more hawkish, then the US dollar could of course rise. Now, the minutes of the latest ECB meeting are due to be released also on Thursday. Now, the minutes are from the March meeting, which saw the ECB take a more hawkish stance, signalling that it plans to end its asset purchasing programme in Q3, and also removing any reference to interest rates remaining at or falling from current levels, which could be seen as opening the door to a rate hike. Now, the change in stance comes as inflation in the bloc reaches a record high and energy prices continue to rise. The Bundesbank has been vocal about the need for higher interest rates. Some other policymakers have suggested that the ECB could be behind the curve. The minutes could shed more light on this. Also on Thursday, international sports betting and gambling company Entain released their Q1 results. Now, online gaming revenue was boosted, of course, across the pandemic as punters couldn't go into stores and revenue reached double-digit growth. With the pandemic restrictions removed, this growth is therefore expected to slow. Now, whilst revenue from online and in-store is essential, the margins are much higher in online betting. News concerning Bet MGM, the group's JV with MGM in the US, will be closely watched. The experience is expected to be the jewel of future growth thanks to an exceptional performance in the US, bringing the business closer to profitability. The strong growth needs to continue for the share price, therefore, to remain supported. The online fashion retailer ASOS is due to release its half-year results on Friday, at a time when the share price has tumbled over 70% across the past 12 months. Removing pandemic restrictions has seen shoppers return to the UK high street, which is expected, unsurprisingly, to hit ASOS sales. Furthermore, profits are expected to take a hit due to rising labour and freight costs, and the massive rise in returns costs. Full-year revenue growth has been left unchanged in the region of 10 to 15%, and adjusted profits before tax are expected to be between £10 and £15 million. Since then, the company issued a profits warning after suspending sales in Russia and Ukraine. Combined, the two countries represented revenues of around £20 million for the group, or 4%. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from DS Smith, Barratt Developments, Smurfit Kappa, Lloyds, Aviva, Mondi, Melrose, Rentokil and Smiths Group. In the FTSE 250, we'll hear from Grafton Group, IMI, Man Group, Vistry, Murray International, Direct Line, Domino's Pizza, Quilter, F&C Investment Trust, Savills, TP ICAP and Softcat. So there you have the highlights coming up this week. As always, thanks so much for watching, and don't forget to click on that subscribe button to make sure you don't miss out on any of our weekly videos and of course our regular special videos. Also, as always, a reminder, if you haven't already, download the app. Why not give it a try and make sure you receive all the latest up-to-date financial news and of course our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.